Hey, hello, and happy happy Aloha Friday.
Yes.
Yes, so we are back with another Friday Live. It's one of our favorite reverse mortgage specialists. We have Wendy Oshiro back with us. I think this is the second time we've had you on. I mean, there's just so
Yes.
much. I want to say, like, there's so much information about the reverse mortgage process, the reverse mortgage strategies, just the qualifications, and like what is a reverse mortgage. So we're so happy to have you back to share with our viewers and
Yeah.
our live attendees. And if you guys do have questions for Wendy, please type them in the comment section and we'll have her answer them right here, right here
Awesome.
today. So thank you, Wendy.
Yeah.
Thank you
Thanks
for
for
joining us.
having me.
So
Absolutely.
So let's just start off real quickly on what is a reverse mortgage. Let's just start off with that real
A
quick.
reverse mortgage is a loan, and that's the most basic way I can explain it. It is a loan, and it's a special loan, though, and it's meant for seniors who are at least 62 years old for the FHA insured reverse mortgage. And you can be as young as 60 for the jumbo reverse mortgage loan. But what it does is it allows homeowners to tap into the equity in their home um, without having to sell their house, without having to make monthly mortgage payments, monthly principal and interest payments back to the lender uh, for as long as they remain in the home. So it is an owner occupant loan, and it is designed to help retirees either maintain their cash flow in retirement or improve their cash flow situation. And again, this is because no principal or interest payments are required for as long as the borrower occupies their home and fulfills their homeownership responsibilities like paying property taxes and homeowners insurance.
Now this sounds like an excellent program for our our seniors, for our kapuna. Now, like I know that there's a lot of myths that are out there, a lot of misconceptions. So let's touch on those real quick because people may have heard different things about why, reverse mortgage is not a good option or like they are not even going to consider it. And maybe you could share like your story on how you became a reverse mortgage specialist. I think that would
Right.
really tie in well to these myths that we have.
Right. Well, for me, it wasn't even a solid reason why I was against reverse mortgages. It just sounded bad. And
Mm.
I didn't have any good reason to look into it. So when my parents lost their independence and, a friend suggested that I look into it, I was, I actually, she brought the reverse mortgage specialist into my home and didn't tell me what they did. And so while we were in the meeting, I found out and I kind of just hit the roof because I was so upset. How could you bring this person into my house? I'm never going to do a reverse mortgage. But then, if I was in a calmer state and you asked me why I felt that way, I wouldn't be able to tell you. I just thought it was the worst thing ever, but for no really good reason at all. So what I found is a lot of people are not educated. They're like me. They have the same kind of reaction. And if you ask them, why don't you like it? They'll either think it just sounds bad or they'll come up with reasons that aren't true about the reverse mortgage product. So, I'm a teacher and, my initial response was not a good one. I really, as the power of attorney and trustee for my parents, I really should have looked at all options for them before dismissing um, like the reverse mortgage. And so, we're all about educating people on how it works, what the facts are, and giving them what they need to make informed decisions. So, you asked me about myths. The number one, the biggest myth that we come across is that the bank is going to take the house. They're going to become owners on the property. We're not going to give it to our heirs. We're going to lose the house forever. That is the biggest myth, and that's what most people think. But to best describe it, I would say, a lot of people are familiar with regular traditional mortgages where you go to the bank, you get approved for a loan, you sign the papers, and then the bank puts, or the lender puts, a lien on the house because the home is their collateral for what they're lending you, or what they're letting you borrow. So a reverse mortgage works the same way, where the reverse mortgage lender will place a lien on the property because that's their collateral. And like I mentioned before, a reverse mortgage is a loan that must be paid back. So what you'll find with the reverse mortgage is, yes, there's that lien. If you want to remove a mortgage lien, then you have to satisfy the debt with the lender. So you need to repay the lender, and then they'll release the lien. So yeah, that's the number one myth, and I hope that helps people understand why it's not true. And then the second myth, I guess, that we come across a lot is people refuse to learn about it because it's for people who who are in financial distress and who are in a rough spot, and this is like their last resort. That's the only reason why they would look at it, right? And so that's false. What we're coming across a lot more nowadays, which I'm really happy about, is people are planning for their future retirement years. You retire in your 60s, and now you have to really plan because you might live until you're 100 years old. People are living longer nowadays, right? And you have to plan for maybe 30 years in retirement, maybe even 40 years, depending on when you retire. Planning is really important. So we're really pleased to see that people are exploring their options and looking at how equity can maybe be utilized in their future to give them a more comfortable retirement. So
one of those things, for example, is, as you're in retirement, you have a fixed amount of income, right? And so when you qualify for a reverse mortgage versus a regular mortgage or a HELOC, or whatever it is that you're trying to unlock the equity, the qualifications that are used are different.
yes.
Right? So maybe talk a little bit about that, because I think that's important. Especially with the lending guidelines becoming so they've continued to become more and more strict throughout the years.
Right. So when people apply for a traditional mortgage, they're concerned, and rightly so, about their credit scores, right? And they think, I only have a 600 credit score, I'm not going to be able to get a loan. Or they look at their income, and if they're only on Social Security, say, they're afraid that they're not going to qualify. And you got to remember that for a traditional mortgage, the lender wants to make sure that the borrower can afford the monthly mortgage payments, right? So they're looking at all of their debt, considering their debt against their income, and making sure that they have enough income to be able to pay every month whatever the mortgage payment is, plus their property charges. And so we look at credit reports. We do look at credit reports and income, but we're looking at it a little bit differently. So when a borrower gets a reverse mortgage, it's generally the last loan that they'll ever make. And we want to make sure that it's something that's going to be sustainable for their future, that will allow them to remain in their homes for as long as possible. And so when we look at, say, the income, we're looking to make sure that the borrower can afford to remain in the home, even if they spend all of their reverse mortgage funds. Maybe they use it all in the first 2 years for whatever reason, and they have no more reverse mortgage money left. But remember, the loan still allows them to remain in the home, right, without having to make mortgage payments. But they still have to survive, right? They still have to pay property taxes. They still have to eat, pay for their cars, insure their cars, pay for gas, whatever. There are still expenses that are ongoing. So when we look at income, we're looking at something called residual income. And the way we do that calculation is we take their income and we subtract all their monthly expenses, like that we find on the credit report, or we look at property taxes and homeowners insurance and maybe maintenance fees if they live in a condo. And we see, okay, after we subtract out all those expenses, what's left over? And is that leftover amount enough for them to live on every month? And so that amount is actually determined by a government table that we have to refer to. And say for a single person, it's $589 that they have to have left over after all their expenses. And then if you're, say, a married couple, it's $998, and then it kind of goes up a little bit from there if there's more people in the household. So we just want to make sure that they're able to remain in the home. So we look at the income, not to make payments back, it's to be able to live. The second thing we look at is the credit report. We're not looking at the score. Instead, we're looking at the history of their credit history. Do they make
on-time payments?
Yes, yes. And
yep.
And the reason is because if they're not paying on time with, say, their credit cards, it might transfer over to property taxes. They might not be, so that's an issue that we have to look at.
Well, I love how it's a little bit different, right? Because they're in a different part of your life, right? So things should be done differently in order to create that win-win. Now, before we started this live stream, you were talking about that there's a couple of updates that have come down the pipe on reverse mortgages. So could you share with us a little bit more about these updates, these new things that are happening?
Some good news
Yay,
in our industry.
Yay!
News. I know, it's a highly regulated industry. A lot of times the news isn't that good, but I have some good news to share. And one is that condo approvals got a bit easier for us, and which is good news because more than half of the inquiries we get, that we had last year, were for condominium owners. And we had to turn a good percentage of them away. I think like 75% of them could not do a reverse mortgage because of one reason or another. And the new change that the government just implemented was new condo forms that do not require the property management company or the HOA representative to sign those forms. We had a lot of pushback from those companies and associations about signatures. They did not want to sign a government form. So that's done now. We don't have to worry about that anymore, which is great. So that opens up the door for a lot more people to get the reverse mortgage. And then the second thing is that in January, the government did increase the loan limit to $822,375, up from $769 last year. Yeah, so there's more that equity we can consider in the loan calculation. So borrowers are now, because they can get more money, a lot more are refinancing than ever before. The environment is good too because the interest rates are still pretty low. So we have more refinances on our books than we've had in the years past.
So the interest rates with the reverse mortgage are in alignment with the conventional and FHA, VA, or is it a little higher? How does that work?
It's different, and it's a little bit difficult to compare. We're both we happen to be low at the same time with the forward or traditional mortgages. But the thing that we look at is something called an expected rate, and right now that expected rate is what we use to calculate loan funds, and that is low, which is good for borrowers. Yeah. So
well, that's all good news. I love good news.
Yeah.
So one more piece of good news. We were also talking about a recent success story that you wanted to share with a repeat client of yours.
Right. And I wanted to share because people that are watching us right now or listening to us, this is a story that hits many different scenarios. So it might apply to, one of your viewers, or it could apply to one of their, say their aunties or uncles or grandparents. So several years ago, I had a reverse mortgage borrower come to me, or a customer come to me because they were concerned about their job. They were self-employed and they weren't making as much money as they did the previous year. So they were concerned about their ability to keep up with the mortgage payments. And they lived in a condo in Hawaii Kai, beautiful condo. And they were just struggling about and they didn't have peace of mind. You know, they felt like, man, they could just lose their house at any moment because the income wasn't steady. So they did what's called a home equity conversion mortgage, or a HECM. This is the FHA, or government insured reverse mortgage. And what it did was it paid off her existing reverse mortgage, and then suddenly she didn't have to make that 1,000+ payment a month to the lender. That $1,000 was now hers. So she did not have to worry about making those monthly payments anymore. But then she was concerned. We kept in touch, and she was concerned later on about the increase in maintenance fees. And at that time, it was about over $850 a month in maintenance fees. And she goes, Wendy, you know, it's only going to go up from here, and I'm not sure if I can maintain, these monthly, this monthly expense in retirement. So she said that she was going to go look for a single family home, so she didn't have to worry about that. And then I got a call. I think it was a year later. She found something in Cocoa Head Terrace, single family home, beautiful home, perfect for her and her dog. And we set out a strategy to use a reverse mortgage to purchase that new single family home. And a lot of people don't know that you can use a reverse mortgage to purchase a new primary residence. So people generally think, well, can't you only get the reverse mortgage on the house that you live in? And that's
what
not
I
the
thought
only.
too.
Yeah, no, you can get it on a brand new residence as long as you move into that new home within 60 days of close.
Wow.
So, yeah, I know. And so she made use of that. And she went and actually got a jumbo reverse mortgage, because her condo sold for a little over 800,000, and the purchase that she was making was a million, a little over $1 million. And so after, paying off the mortgage and stuff, she only had so much money to put down. So the reverse mortgage made up the purchase price. Yeah.
Nice.
And so we closed on that, and she does not have to worry about her mortgage payments, and it's the home that she wanted. It's single level, which is perfect for somebody who is looking at the future and maybe thinking, her ability, her physical ability to get around is better with a single level home than a 2-story home, right?
So she can age in place, no maintenance fees, and no monthly mortgage payment. It's just maintaining of the home and the property taxes and her budget.
And perfect for her dog. Like they have a yard. I mean, I'm so happy for her, And then like I mentioned earlier, the third thing, so this customer of mine did 3 reverse mortgages with me. This third one was recent, and what happened was, how the interest rates went down.
Yes.
So, it was time for her to look at, to reevaluate her mortgage and see if there was additional monies that she could get out of her home. And we found that if she refinanced her reverse mortgage to another reverse mortgage, that she could get additional cash. And so we just closed several months ago, and she has more cash in hand, and she's one happy customer.
Wow. So I love the way that you helped her to strategize, to really design that retirement lifestyle, the retirement living, to take the stress out, and then even strategize further when the rates went down, right? So I think that's one of the benefits of working with someone like yourself who specializes in the reverse mortgages, and really just takes that as that's your one thing, is the reverse mortgages. It's just, that's your lane.
All we do. That's all I know. Don't ask me all about regular mortgages because I can't answer it. Yeah.
And and we had your daughter Paige. She's gonna be, the radio show will be airing this weekend. So it's a family business, family run business.
It's becoming that way.
Yes. Yeah. So congrats to you on helping all of these clients, and then bringing your kids in as and teaching them. You know,
Mm-hmm.
it's I know that can be, you know, a challenge all in itself, working with family, and you know,
Yeah.
it's really
Can I
great.
can I make a comment about that? Do we have time?
Yeah, yes,
Okay.
go for it.
So, I was a teacher for 16 years, a high school math teacher. And one of the things that high school math teachers or high school teachers in general are passionate about is preparing kids for the future, right? And
Mm-hmm.
so when it came to my daughter, she was stuck to me like glue from the time she was born, She she and I had a really special relationship, and so she followed me everywhere. And when I started the reverse mortgage, my reverse mortgage business in 2007, she came with me to seminars, sometimes on appointments, and she got to observe a lot. And so she actually started serving um, in like nonprofits and lending her skills as a photographer at an early age, or even just manning the registration table from when she was, I think, 16. And
Wow.
so once she graduated from high school, I put her into a loan officer assistant position because she was
Mm-hmm.
real good. You know how kids are good with technology and
Yes.
graphics and videos and all kinds of stuff. So I wanted to really utilize that in my business. Um, and then she started catching on. You know how we all have our own lingo, right, in our industries. And she started to understand it, and she started to become curious about it and ask questions. And then after I think it was like 2 years after she graduated from high school, she got her license to be a loan originator.
Mm.
And like you had mentioned, we were talking about it earlier about how she had to get over the mom boss thing. I was her mom, and then now I'm her boss, and I'm telling her what to do, and I'm not liking what she's doing, and I'm making her do it again. Like, she had to get over all of that. But now she and I, we are a great team, and we just on the way over to our office, we are talking about ideas on how to educate the public about reverse mortgages. And I'm just so excited that she's, come into her own as a professional. She has her own clientele, her own business. But for people who are thinking about, how they can help your kids, that's one way to help your kids, is to get them involved in what you do early on, and invite them to tag along to things, and they pick up, they observe,
Mm-hmm.
they pick up, they become curious. And you never know, they might be help you start your family business.
Well, that's a great story, and I heard that your son is coming along too. So
I know. And he
that's
said, I am
congrats.
never going to join you, my mom, and my sister ever. And now he's going to join us next month.
Well, that's a great story, and I know you guys are out there educating the public, educating realtors. You have CE classes that you can come in and teach. Just so where could our viewers find out more about these classes? Would it be on your website? Could they sign
Well,
up for?
actually, no, we are more about helping other businesses educate their staff. So right now we're focused on meeting with financial advisors and
Okay.
their teams, realtors and their teams. So we are available for, you know, um, managers to bring us in and teach them. We like working with professional partners because it's more of a problem solving type of relationship. And I'm a teacher, I'm a math teacher, and my daughter grew up thinking about strategies, ways to
Mhm.
help people. So it's a really, really good fit. And of course, we're available to just chat with anyone who's interested in looking at this.
Well, thank you for your chat today. I think it was super informative, and we covered a lot. And I think anyone that has joined us or has watched this learned a thing or two, including myself. So I always learn something new every time we talk, Wendy. Thank you so
Awesome.
much. Yeah,
Yeah.
thank you so much. And then I'm going to end the broadcast, but just stay with me.
All
We're going
right.
to take it out.
Thanks. Thanks so much.